Hello, everybody. It is great to be here one more time today. And my name is Gary Fowler, and I'm the CEO, president, founder of GSD Get You. And today we're having our show, Simplenight Presents AI and Tech. And I have an incredible guest, my friend Leon Eisen. He's a Ph.D. He's studied mathematics and physics. He's an inventor. He's an entrepreneur. I mean, he's all around good guy and understands the startup ecosystem in an incredible way. I've known him for years. I've seen him in action. With that, I'd like to bring in my friend Leon. Hi, Leon. How you doing, buddy?
Hey, Gary. Thank you very much for an amazing introduction. I cannot believe that everything what you said, it's me. So thank you very much.
You resemble that remark. So, Leon, tell me a little bit about how did you get started in tech? I know you went to university. What was your degree in? What did you study first?
I have Ph.D. in quantum physics and optics, and I did my postdoctoral research in quantum computers. I mean, on the core quantum computers called quantum laser cooling. And when I finished my postdoctoral research, I was about 38 years old. So It looks like to make a career in science, it's a long way, and it's not worth it. So I decided, and by the way, my professor created his new company, and he invited me to join, and I decided to move to industry. Despite the fact I didn't understand anything in industry, I was a scientist, as you know. For any scientist, the goal of the scientist to make as many articles as publish as many articles as possible. So it's totally different goal.
Why do they do that, Liam? What's the deal with publishing the articles? Because they want the research. Did they get grants, or why did people?
It's because first of all, any research is based on grants, and to have a lot of grants, you have to show phenomena. You have to prove something. You have to show. It's like actually, it's very similar to entrepreneurship, to business. You should create something new. You should publish it. You should defend it. You should go to conference. You should talk about it. And in this case, you can be granted, and you get money to continue your research. It's very similar to entrepreneurship, but only different goals, but actually similar thing.
Wow, that's amazing. And so I there's one thing I remember seeing, and you say that you're the senator of the Grand Assembly of the World Business Angel Investment Forum. That is a pretty nice title, the senator of the Grand Assembly. What is that?
World Business Angel Investment Forum. I think this is the biggest organization on financial inclusions. And we are working with G20. We prepare reports, we participate in G20 meetings, and we have more than 100 countries inside. And by the way, today in London Stock Exchange happens our meeting. I didn't have time to go there, but actually a lot of people from many countries gathered in the London Stock Exchange for World Business, for WBF specific meeting. And so also we have some fund, we invest in the startups with high impact on our world and on humanity. It's amazing people there. I think this is the biggest, maybe one of the big and most impactful angel investment organization.
And you're going down through it. Okay, I got that, but how do you get to be a fellow member of the Royal Society of Medicine?
I applied.
You applied. Well, that makes sense. Okay.
I applied. They check it. They verified me, and they said, "Okay, it looks like you're eligible." I have a card somewhere that I am fellow.
Wow, that's amazing. Okay, so I got that. What about the Global Africa Leadership Council? How did you do that?
People approach me like investor, and they were looking for investments and participation in some project in Africa. And I like these because, for example, I conducted so-called African unicorn pitch. So in our Network.VC, we have unicorn pitches over the world, and this is our IP. And I decided to make Pan-African unicorn pitch on e-commerce and financial companies. It was amazing. I think one of the best company I ever met won from Morocco, actually won this unicorn pitch, and for me it was amazing experience. I met so unique African entrepreneurs during preparation of this unicorn pitch. It was online. I'm going to do it on site, not online as well, maybe in Nigeria or somewhere else. And this year, we'll see.
Wow, that's amazing. Okay, so you've had this incredible journey. You know, if you're going down through it, how do you go from physics to entrepreneurship? How do you go from the Weizmann Institute to the entrepreneurship?
Yeah, it's an interesting story because actually I was not born like entrepreneur, even in opposite. And I didn't think about entrepreneurship at all. I was going to be scientist, and all my family is scientists. And just in the middle of the crisis, 2008, 2009, I was working with some interesting project, and I saw how companies just fail. And I was born in April, so I like challenges.
Mm-hmm.
And I decided I have a very interesting idea, something that nobody did before. I want to make a wrist worn pulse oximetry monitor without fingertip sensor. I thought will be some kind of revolution, so people will be able to wear it for a long time. And by the way, COVID proved this. I was wrong. I was right, not wrong. I was right. So, and I decided to tackle this challenge. All people were busy with wellness monitors like Fitbit and others, and I decided to make medical device. So finally, I did the world first FDA-cleared medical device wearable. And today, many companies using my device like a predicate to get FDA clearance. Today, it sounds common, it's common sense. But just take 15 years ago, now what they think about it. People couldn't measure pulse, still couldn't measure pulse on the wrist. And I was talking about pulse oximetry. So it's a different level. Okay, so I did it.
Well, that's amazing. And so you
And
did.
I raised the first $1 million in the middle of the crisis, and people laughed on me. They said, what are you going to do? But I burned my bridges, and I decided to leave any work, and decided to focus on raising capital and building my product, and it looks like I succeeded.
So if you're going down through, what happened to that company, Leon? Is it still around, or what's going on with
Yeah,
it?
it's still around. It's still around. We sell. We continue to innovate, and I cannot tell you today because it's not for the public. But next year, our world will see some revolutionary device that will enable something that nobody did before.
Wow, that's fantastic. All right, so
Yeah.
you've gone down through this great journey. You're into quantum, right? Not only as a scientist, but then you also talk about strategic clusters of venture growth. So let's talk about what are the five strategic clusters.
Yeah, I developed a so-called quantum business thinking methodology, and this methodology is just methodology. It should be applied somewhere, right? So you cannot apply it without understanding how to do it and where at which cluster of startup development. So I defined five very important clusters where you have to synchronize your startup development. So uh, it includes, for example, something that belongs to opportunity, market, and in general demand. You should understand what kind of demand what kind of supply, and where you are positioning yourself in the middle. When we go to another quadrant called viability or deals, so how to make deals, how to make partnership, how to fund your project. So this is all about it. We will talk about it later. The third cluster belongs to, I call it feasibility or effect. So it's all about product and operational excellence. Also, I call it drill engineer. So each cluster belongs to some type of employer who can work within this cluster, because when you hire people with different mindset. It could be mindset of drill engineer or analytic guy or visionary. You should know exactly whom you fire and which cluster it belongs. This guy belongs to. So feasibility. Next cluster is I call it stakeholders. So all about customer success, all about culture of the company. And I would say in the middle, but somehow in the middle, it's a mindset of leadership. It's most important because leader defines the company. So all the company, independent of the size, I would say belongs to leader. Because if you, for example, go to lead another company which was prepared for different leader,
Yeah.
you should actually fire these people, because you cannot manage these people in this case. And by the way, there is an amazing book written by David Siegel, a former CEO of Meetup, and I had podcast with him. Conquer, Decide and Conquer. Amazing book. I recommend to read about leadership. Everything's there. How to lead company to success. So now we're talking about 5 such clusters. And interesting, what does it mean for the company?
Mm-hmm.
It means that we consider the company, the startup, like a whole product. Now, but the thing about it, people think about, okay, let's think about marketing, let's think about operations, business processes, but together for investor, for acquirer, for buyer of this company, this is the product.
Right.
All people inside, this is the product. I call it whole product. So you have to consider your company like you consider your product. Your product have electronic elements, have algorithmic elements, have components of, I don't know, everything. But all together, it's a whole product. And if you take, for example, iPhone, if iPhone doesn't have application, it's just communication device. That's all. It's not the whole product. It's just feature. But having all applications together, this is the whole product. And I encourage startups and founders to consider their startups like a whole product. For example, a lot of today very famous company which grew very, very quickly. For example, just imagine companies growing very quickly. Definitely, they don't have time to align their customer success with such high velocity of growth. So churn rate is growing. I knew companies today, unicorns, they had churn rate about 100% because they couldn't support customers. They put everything into the growth. It happened. So if you consider your company like a whole product, you consider synchronization of all these 5 components. And even I built a so-called scorecard that I distribute, and I ask my companies I mentor to fill up. And if they have score 60 plus, I take this company. If they have score 60 minus, I don't take this. So if I can show you, if I write some, for example, if I write some these components, so let's take five, it's not quadrant already, but 5 components, right? And you have something like a benchmark. So you have
Yeah.
5 components, and you have some benchmark. This ring is a benchmark, and now you can point where you are in all these components. Nobody get to 100, nobody. But you can build somehow like this. Let's say, and you can estimate actually how your position like a whole product looks like, and then you know exactly where you have to polish it finally to reach to this circle that is a benchmark. So I call it benchmark scorecard. And actually this is very important because this shows you where you are. And what happens? Many entrepreneurs, they cannot evaluate themselves. I ask people, what are you doing now? I know they don't have any experience. What are you doing now? Wow, we are working on documentation, pitch deck, everything to raise capital.
Right.
And I ask, okay, where you are? Could you tell me? We believe that we do everything is okay. What happens finally? They go to investors. And people talk about big numbers. You have to go to 200 investors finally to get funded. Bullshit. It's because they wasn't ready and they learn on the go and they spend years, they spend time, which valuable time they could invest into their product, into the market. They spend on looking for money because they're not ready and they don't understand this. So one of my goals and mission to get them aware that today, in today crowded market, with demand of the money over supply of the money is about free. Never happened something like this. You should learn. You should be the best because investor do not invest today in the range of qualities of the company. They invest only into the best company. We are ready to pay more, maybe high valuation,
Yeah.
but to the top company and do not accept some average company like it happened
Well,
before.
they want to reduce the risk, Leon. They don't want the risk, right? They want revenue. They want less risk. Whatever way they can get less risk and get the most return on the money. I mean, it's pretty simple, right? And unfortunately, sometimes you've been around the block on this a few years, just like myself. We've seen irrational exuberance where back in the early 2000s, where people were invested in anything, and all of a sudden the market crashes,
Yeah,
right?
right.
But then it's
But
funny because isn't it interesting, Leon? Because those things that they said weren't going to work, like Amazon in 1999, when he was on the Jay Leno show, he becomes one of the richest guys in the world. So what we actually were doing then was right. It's just it went up very quickly and tapered down, went down, and then all of a sudden it goes back up again.
yes, exactly. So it's again it's a number game because it's you should be lucky to raise money and to make a company and not to die. So instead of put some time and some efforts to learn, they do it by themselves and learn by hands. I call it not by head, by hands. It's okay. Some will survive, some not. But it's like finger to the sky.
Yeah,
Maybe I will survive. So I offer companies whole product mentorship, not marketing separately from feasibility or viability of the company. Whole mentorship, and I evaluate the company. I identify blind spots, and I help this company to be ready to investment. And if it's okay, I can bring them to our network VC or other investors, but I want to be sure this company is actually ready and they understand what they are doing. Interesting. Every day I meet a lot of companies. Even last week it was 20 companies for the day I met. And they did pitches, 15 minutes speech, 20 companies. And I can tell you, 99% of the companies start their pitch like this. We developed X, Y, Z. Okay, who cares what you developed? Millions companies develop something. And then they continue. And I can put any name before what they're talking about.
Yeah, that's true. I mean, that's one of the things they get. They're not good at storytelling, right? 90% of building $1 billion companies is storytelling. So if you can get them to have the right storytelling capabilities and it's a synergistic message, you can do incredible things. And sometimes we forget about it.
Yeah, exactly. So I asked them, tell me the problem, but not only the problem. Tell me the problem at scale. If this problem not at scale, I don't want to hear it. And this they cannot, because it's very difficult for to say something valuable for 60 seconds. They like to talk 10 minutes about what they're doing and not about actually even good companies, really good companies raise capital. I talk to them and I feel, wow, I talk to dead body, because this company is dead already, no future, because this guy doesn't understand. I don't know, he found some investors who accepted this. What I feel, he won't make it because he doesn't understand and he doesn't want to learn. And the worst thing happens, they start to argue. And this is the worst things. You know, I published article about how to react to investor. And if investor, it's based on my experience, because I like when I was young, I like to argue and with investors. I didn't understand it. And what I learned, that if investors say, please elaborate 2 ways, or close computer and say, okay, thank you, let's meet again next time, or go back, streamline a sales technique by Wolf of Wall Street. Very good book. I recommend to read it. So go back to the beginning. Say, okay, if you want to elaborate, let's start from the beginning, because it looks like I missed something, and do it much better again. Or
Yeah.
close computer and go out. But if investors say, please tell me more, this is amazing sign of engagement. So, but what happens in reality? People get into details of the business on to elaborate. So, okay, I get into details, but investor and his mindset, subconscious mindset. By the way, you didn't mention that I'm in the board of European Consciousness University. So we're working on neuroplasticity and how to deal with AI and how to build relationships with AI. And in their subconscious mind, they already rejected. Just this signal didn't come to their cortex. Subconsciously, they rejected. Nothing to do more with this investor. Just get out from the room. That's all. But people know, people get into details, scandal happens, arguments, all this stuff around, and this is what happens all the time.
Yeah, no, it's amazing. And, you look at it. So, you know, we look at it today, 9 out of 10 companies fail. Why did they fail?
Only because of fixedness of their leadership.
Yeah, a lot
I
of
think.
times they're just so rigid they don't want to do anything, or they develop a product so much and they never take it to the customers. They like to engineer things, right? They over engineer and over
Yeah, this
engineer.
is this is same richness. Uh, my quantum business thinking methodology specifically designed to overcome these. because what rigidness comes from? It comes from fear of uncertainty. And if it worked very well in 90s and beginning of 2000, today it doesn't work. So I meet entrepreneurs from 90s. They're totally different. They don't understand what happened today. They would never raise money or raise startup today. And people should be very flexible. I have three types of planning. I can tell you then what kind of type, or you can guess what kind of type I use. There are three types of planning. So the first, I call it rigid planning. When you set the goal and you set very specific path to the goal. So this is the rigid planning. If something happens, everything is distracted completely. Flexible planning, next type of flexible, where you have the goal, but you can validate different paths. You could try this path, another path, but goal again. So I want to go to their shop, and I can go this way, I can go that way, I can buy and eat ice cream. Suddenly I decided, but finally I get to this shop. And this is for middle managers. And for real leader, it should be adapted or dynamic goal setting and dynamic planning, where every day I evaluate my goal and I evaluate my techniques to get to this goal and ways to get. So I evaluate every day everything. I'm so much flexible. I try to understand everything, what ping pong that happens in our world. So I hear this ping pong and dynamically adjust every day. Even I planned something before, I adjust it based on new information I get.
No, that's
and
important.
This is winning. This is winning solution.
Leon, we're coming up to the top of the show. Closing thoughts, and how do people get a hold of you?
They can go to YouTube, just write Leon Eisen. It's my podcast, Venture Growth with Leon Eisen. They can go to my LinkedIn, just write Leon Eisen. And they can go to Google and also just write Leon Eisen. And in Google, they will get everything what they want.
No, that's fantastic. No, you're an amazing guy, and I really appreciate our friendship and our long-standing opportunity to work together in different kinds of business ventures. And to all my audience out there, thanks for taking one more time, taking your time to join us today for our show, Simplenight AI Presents. My name is Gary Fowler, and I'm your host. Stay happy, stay safe, and stay healthy. And I'll be back to you again with another exciting edition. Thanks, everybody. Take care of yourself. Thanks,
Thanks, Gary.
Bye-bye.
Thank you. Bye.